Hey there, Dan Holland here at Hedgeye, joined once again with the one and only Neil Howe, Hedgeye Demography Sector Head, who has an excellent article available on our website right now. You can check it out. We've been tweeting it up a storm. In fact, it's called The Perfect Storm of Trends, Points to Less Interest in Things. I've got it right here, just printed it out. Neil, what's going on here?
We're living in an immaterial world. I think that's what's going on.
A little play of Madonna there.
Yeah, we got it. Just a little 80s. I think we need that from time to time. The goods producing sector worldwide is in trouble. And this is something, of course, it's been in the news as kind of a reality. And many of the indicators of that, I think, are just worth summarizing, just to remind us what's going on. Before the Great Recession, throughout the entire post-war era, global trade always rose several percentage points faster than global output. Since the Great Recession, it's struggled to keep up, and many years actually falling behind GDP, which is one symptom. You look over the last several years, particularly the last 2 years, the global manufacturing PMI has been steadily declining, obviously led by China. And then we look at the U.S., where we've had 5 of the last 6 months. Obviously, last month it peaked up again over 50, but it was below 50, which means contraction. And globally, we've just seen these incredible examples of contraction, particularly not only in China, but the countries that are exporting raw materials and goods to China. What about commodity prices, and what about the producer price index, right? Around the world, we've seen a decline. Since the summer of 2014, almost all of the major economies have shown declining PPIs. And the fact is that goods are being outpaced by services. We've seen hardly any decline, not even 1 month of decline in many of these countries in the service economy. So I just want a little perspective first on this, and that is, we all know that the decline in the goods producing part of our economy, agriculture, mining, and manufacturing, has been in the high income world, true since the middle of the last century. This is a long-term trend. And it typically goes, it declines very steeply during recessions, when we kind of overproduce stuff, and it kind of plateaus a little bit after a recession. But it seems to be this continuous decline. Now, particularly after the last Great Recession, where it declined quite a bit, it did plateau a little bit in the years right after the recession, and I would say particularly for the United States, the decline in global trade has actually meant a little bit of a respite for the United States.
Would you say, this is what has central planners so concerned right now, trying to stoke the embers of, get people out there and buy, using all the various tools at their disposal, and it's just not working.
Well, it's not working, and it's not working particularly for goods. Again, look at industrial production. That's been the one huge drag on the big 4 indicators, which is basically sales, income, employment, and industrial production. That's been the big negative. But what I wanted to do is just look a little bit at some of the drivers now.
You have 6. You have 6.
Yeah, but I didn't even count them. But I have a
off
bunch.
At China.
I have a bunch here, and we're going to go through them. It's basically China, urbanization, extended families, the growth of the sharing economy, experiences, and digital unicorns, and demographic change. So we've got a bunch of them, and I just want to run down quickly to give people a sense of kind of all of the forces now, I think, particularly that are stronger now than they used to be. One, which is obviously very much relevant to the current era we're in, is the huge slowdown in China. China is like this supernova, which is now beginning to kind of implode.
Can I ask you a quick question? Do you buy their numbers? Do you believe their reported numbers? Do you think it's
No, I don't.
So it's worse than it's being reported?
Yeah, it's worse than it's being reported. On the other hand, they may never have been as fast as they said. But I do think that the negative is more on the downside. We know that particularly in things such as inflation indexing and imports and exports, which really means they tend to overestimate more on the downside. So I think a lot of people are saying it's not 6.7, it's probably between 4 and 5, or if that. So, but the main thing is this, is that for several years before 2014, China was basically importing and using half of the world's raw materials. We were talking about cement or iron ore or construction cranes. It doesn't matter what it was. They were using it. That's happening no longer. Another thing which is going on, particularly in the United States, is urbanization. I mean, urbanization is a global trend, but we see it particularly, we are urbanizing faster than we have historically over the last 10, 15 years, particularly in terms of high-income young people and moving into the cities. I've talked about this at length on stuff that we've done here on housing, but the demographic numbers are really unambiguous here. The best and brightest of the younger generation are crowding into cities, and cities, as you know, you don't have to need much stuff. You know, you're dependent on public services, you often don't need a car, and extended families. A record share of young people are now living with their families, right? You have maybe between 18 and 34, maybe a quarter of young people now living with their families. Well, there's a lot you don't need to own when you're living with your family, right?
Well, this one right here, the experiences as the new form of conspicuous consumption. We were talking about that before. Experiences, that was really, really interesting. I think the investing implications are huge.
Well, they are huge, and so think about this. Thorsten Veblen probably did more than anyone else to really explain why we consume stuff. You know, we don't consume stuff just because we have to eat and live. I mean, that wouldn't be much. We consume stuff for social reasons because we want to achieve status, and we want that status reflected so that everyone can see how good we are.
Keeping up with the Joneses.
Keeping up with the Joneses, or maybe being better off with the Joneses. So we've known that, and consumption has been like that in every civilization for millennia. That's always been a motive for consumption, to show it off, right? In the past, up until very recently, you could only do that with things. You had to buy a boat or a car or a house, and you could show it off to people. Now, with the social media, you can buy expensive experiences, and you can curate them on social media and show them to all of your friends. So it no longer has to be a boat or a car. It can be a trip to Machu Picchu. It can be an evening at an expensive restaurant. You just get to show all of that wonderful stuff. Well, this has huge implications, right? It means that we're moving, as Joe Pine used to, his great book called The Experience Economy, which he wrote about 10 years ago, but we're moving from things to the ability to serve the same social function through experiences. And I think this is new, and this is something that some Xers, but particularly millennials, are very accustomed to doing. And this is why you find millennials don't have the same joy about buying a new handbag or buying
you can rent purses, can't you? I could have sworn I saw an advertisement. You can rent
okay,
purses.
now you're getting into another thing which we have to talk about, and that's the growth of the sharing economy.
Crazy.
So of the things you do want, you no longer need to own.
Right.
You can just rent them from someone else who already owns it.
Like a $1,000 purse, a woman could just rent it for the night.
Well, that started with Rent the Runway.
Yeah.
So if you wanted a great brand name piece of clothing you could wear, and you get photographs you put on your website, right? You put it on your Facebook. You don't need to buy it. You just rent it for a couple days and have lots of photographs made. But yeah, and now it's spread to watches, purses, you name it. But it's toys, it's tools, it's bicycles, obviously cars. You look at Uber, which is just a broader form of the sharing economy. But here's the point, is that each thing you buy now is more extensively utilized. So most things, most of the time that we own, are never used. If you ever fly down to Miami, you're looking out of the plane when you fly down. You go over Boca Raton and Fort Lauderdale. You see tens of thousands of pleasure craft that are being unused. Interesting statistic: the typical pleasure boat is used only about 7 days a year.
Oh wow!
Put that together with a digital app and sharing services, and suddenly you have an industry maybe I don't want to belong in.
Sure.
You know what I mean? That's enough pleasure boats forever.
Well, it sounds like you want to belong the manufacturer of selfie sticks, maybe.
Yeah, there we go. Something that augments the experience economy. And then you have things such as Craigslist and eBay. So you can also buy things online. There is nothing that crippled, I think, the market, the industry for furniture more than Craigslist. Right. Everything gets reused.
I thought so. We just sold some stuff on eBay, a couple weeks ago. Yeah.
So and then a couple. Let's just than clothes or the broader idea.
Yeah.
This is something that's growing. It's particularly strong now in Europe, South Korea, Japan. You may wonder what that has been common. Those are the lowest fertility rate areas of the high-income world. You're seeing rapid aging in these countries. They're having less children. It means a lot of the more people are aging in older age brackets. So what happens in an older society that's no longer growing? Well, let me just go down a few things that happens that mitigate hugely against thing production. Okay, first of all, there is no capital broadening in an aging society, which has no longer a growing working age population. You no longer have to build new houses. They've all been built. Right. Just keeping them going, maybe. You don't build new houses in Germany and Italy anymore.
So you don't need copper, you don't need steel.
You don't need any of that stuff. You just need to rehabilitate. Yeah. You don't need to build new factories or new equipment. You just need to maybe to improve the capital deepening, improve the ones we have. But here's the killer, is that the people who, in addition to that, older people, which are much more plentiful in these societies, are the least likely to buy things and the most likely to consume services, starting with healthcare and personal care, right? Who are the ones most likely to buy things? Even today, and certainly historically, young people who don't have any things yet and they have to buy. Well, there are fewer of them, but more importantly, is that the income that the elderly are getting in these societies, which are all of these societies are basically pay-as-you-go programs in health and pensions, is coming from taxes paid by the young. So the young have less money to buy things in the first place. It's going to older people who are buying them more on services. This is a big shift, and it tilts the whole economy in a certain way.
There's so much to cover here. Before we totally sign off, who are the biggest beneficiaries? Who are the biggest losers in this huge, paradigm shift that's going on around the world? If you were to just name, off the top of your head, some companies, industries, et cetera.
Well, I think the movement toward the service dimension is big in a lot of places. I think, for instance, you look at companies that are trying to turn their retail purchasing of goods into more of an experience. I think Urban Outfitters and RBI would be a good example of making it more an experience-like fun event. Right. I think you look at the things like home services with Home Depot and Lowe's, which are attempting to move into the sort of, all of these companies are trying to move them more into the service area. A lot of the e-tailers, e-tailers pride themselves on just delivering the things. You come on the website, a lot of them are actually now creating now brick and mortar chains, not even necessarily sell the thing. They don't have any inventory often. Like you go to Patagonia, they don't have any Patagonia stuff there, but you can just have the experience of being there. Maybe take pictures, you're just wearing it, even if you don't buy it. I think worldwide it's going to have enormous implications. This last year, the hardest hit countries were the lowest income countries. These are the ones that produce all the raw materials, the copper, the bauxite, the iron ore, and all the stuff. That we're talking about the middle part of sub-Saharan Africa. We're talking about a lot of Latin America. We're talking about many of the Southeast Asian countries that export to, and Australia that export raw materials, certainly Indonesia exporting raw materials directly to China. They have taken a huge hit. Latin America as a whole last year actually had negative GDP growth. An entire continent, which, a lot of us, have a lot of hope for, maybe doing a little bit better this year, I don't know, with Brazil going the way it is. So that's an issue, and I think a lot of these countries which have spent a lot of time developing their manufacturing and industrial production are going to have to spend more time developing human capital. And you look at countries such as India and Philippines, which is an example that I chose at random, who are taking advantage of in that country, their native English-speaking skills to provide services
call
to
centers,
the world through call centers, right? And finally, and this is kind of a broad implication below the takeaway, and this is kind of maybe my final point, but really an important point, and that is, we're talking about private things. We're talking about private things that retailers sell and that individuals buy. But in many of these countries, and certainly in the United States, we have a huge backlog of needs for public things. We have infrastructures falling apart in this country. We have trains that they're getting into accidents here. We have Amtrak, which is antiquated. And so we have an enormous backlog of infrastructure products, and we have done very little, even at record low interest rates. We actually had an interesting discussion recently on that. Why aren't we floating new bonds? Why aren't we producing net new munis? To actually, because we distrust government, a lot of reasons. But the interesting thing is that I think that only when we have a new political situation with greater trust, greater consensus belief in the future, and we actually invest in a new infrastructure in this country, will we be ready to actually start buying more private things to fit into that new infrastructure. And I would just say that the great example of that historically was the World War II generation, the GI generation, which came home from World War II, and they just nonstop infrastructure, right? There's Army Corps of Engineers and damming all those rivers and the interstates and the suburbs, urban redevelopment and all these things today we think is horrible, straightening rivers and flattening slums. But anyway, they created all this new infrastructure. And then by the late 50s with John Kenneth Galbraith, we had, the affluent society, and everyone was going to shopping malls and buying stuff to fill this infrastructure. My take is the infrastructure now is no longer can take anything new. It's old-fashioned. We need a reset. We need to revitalize publicly something in this country before we can have new dreams about new frontiers of material consumption.
You think that's going to happen anytime soon? I mean, with the state of affairs right now, you're optimistic?
I think it's going to have to get worse before it gets better. But in my timetable, I'm looking at 10 to 15 years from now. I think we'll be maybe finishing a reset there. I'm looking for where once we get publicly as a country more invested in sort of our public thing base, then we can really think more imaginatively about doing something creative with things in our private life. Look, there's Maslow's hierarchy, right? Food and shelter first, and then self-actualization at the top. And something like that may characterize societies that are becoming more and more affluent. There may be a long-term trend toward the less material. But I do think there's long waves there. That's a wavy process. There are rhythms and ebbs and flows in that. I think there will be a time at which we can talk about people taking pleasure in things again. But I just, in the immediate future, I don't see that. Well,
I'm looking forward to hearing more about that in a future time. I thank Neil Howe, head of Hedgeye's Demography sector, for joining us here today. Make sure to check out his article on our website, hedgeye.com, and follow him on Twitter @HoweGeneration. Thanks so much.